Hi, this is Randy Finney with Right Side of the Chart, and this is a late session market update for Friday, August 9th, 2019. I wanted to do a video. I know it's only an hour before the close, and I'd just wait for the close and kind of do a recap of the day. But being today is Friday, in fact, I've had several questions in the trading room to share my thoughts. Randy, would you go home would you go home short over the weekend? Somebody had positions. Someone else said they didn't have any. Would you take any positions before the weekend? So let me just say, as of now, yes. But my reply to the person, for example, that didn't have any positions was this. First of all, I wouldn't go fully short right now. There's still some levels that need to be taken out to firm up the case for another big leg down. We're above this week's lows, which were big support earlier in the week that we hit on Monday and tested again, and they've held all week. So from just a pure, I try to, we say, is a trade objective or not? TA 101 or Trading 101 says you either, if you're looking to short, you either short a bounce back up into resistance or you wait to short a break of support. You don't go long on support. However, with that being said, I said if I didn't have any positions, if I was all in 100% cash, I wouldn't take a full short position, but I would take a starter position. Whether that, depends, half a position, a quarter position, whatever your comfort level is and where you think the market's going. The other thing to that as well, I mentioned to the member was at the time I said you have an hour and 20 minutes left to decide, and then I'm listed, and that's what I'm going to do here. What would strengthen the case to go home short, maybe a little shorter. In other words, I said depending on whether or not I would, if I didn't have any positions, take home some shorts. And if so, how much? Depends on what we do the rest of the day. In the trading room today, if you're a gold member and you have time, we've been living in the world, or I have, of these 1-minute charts. I'm going to show you some 60-minute charts. And so this is what's going on. There's the Qs and SPY as well have been extremely tradable. These are the patterns. We had this uptrend line in QQQ and SPY. I'll go over that in today's video. I'll go over the market wrap, just leading to there's a lot of takeaways from these wedges, sell signals, as well as how much of a move to expect from each chart pattern break. Typically the smaller the pattern, the more. And so what I'm watching is what happens the rest of the day. And where I was going with that is, let's go back to these daily charts. Let's turn off all these lines for a second. All right, so far today, the bulls were not able to capitalize or build on, build on yesterday's big green candles. And if you recall in yesterday's video, as well as on the site, I posted a chart. I showed some examples of the big drops that we've had, comparable drop right there. That's, again, being the closest thing on an initial leg down that we've had to this one. And at that point, we had big green candles. It's common to come at the top. And in this case, on that first one, we had a follow-up green candle. So at that point, you still were in an uptrend, but then we faded it. So here, let me zoom in closely. So these are things I'm looking for, and this hasn't happened yet, and it may not happen. But see, it's that big green candle. So I'm putting a lot of emphasis on the yesterday's lows, or even, let's say, Wednesday's highs. Give it a little room. So what happened there is, you can see once that was undercut, that was it. I mean, there was a little pop. They tried to rally it. It couldn't hold above there. Actually held for about 3 days, but you can see that big green candle was wiped out. Not the next day, but the following day. And from there, pretty much it was all down. Same here. We had, again, another rally that ended with a near-term buying climax, that big green candle there. The following day, just like today, I'm zooming in, by the way, if you don't see it here, it's that's November. That first one was in October last fall. So the next day, there was no follow-through, but it was an indecision day. You had this, we call that an inside day. The price traded within the inside of that candle. That's an indecision day. Could have went up, could have went either way. It's not really bearish per se, but it's not bullish either. They didn't build on the gains. They closed red, but again, let's not try to take too much of it. But what then happened is, you can see we took out that candle the following day. This red candle, the way my candles are set, they are color coded to show you the close of the day. If you the net change on the day was it's not open and close. That's a different setting. You can have a setting where it'll color your candle green or red depending on if the stock closed above or below the open. I'd just like to see how it closed the day, and that was a red candle there, so that means we closed at the bottom of it and we took that out. And again, that's all she wrote. Another rally, big green candle right there, strong day, big red candle, took out the lows, and that was it. So these are things I look for in a downtrend. The day is still young. 1 hour to go. Anything can happen. So right now it's more of an indecision day. You can't really say, okay, the bears won because the bulls couldn't put another green candle. No, just a consolidation. Maybe tomorrow's green, and we'll keep going from there. So those are things I'm watching when you zoom in tight. Like I said, you want to be safe. Really look at I like the gap down. That's the level that should hold. Certainly it would help the bearish case to take out this entire candle, whether it happens today, next week, or soon. It would need to happen soon, ideally. And then above that, of course, there's that top of the gap from Monday right there. And if that goes, that would clearly have put that candle in the rearview mirror. And again, that was support, not just from the gap, but there was a lot of other things there. And then the lows. So let's put it this way. Check mark number 1 for the bearish case would be to take out, especially a close below yesterday's candle. Check mark number 2 would be to move back below, and especially a close below the high on Monday. That's that gap down. And then check mark number 3, the final should be the nail in the coffin, I would think, if it happens, would be that. So as far as positioning goes, example, you can add today, or you can hold off and wait and see. There is a risk that Monday you gap down big and you say, darn it, I could have shorted up here at QQQ 187, and now I have to short here at 3% lower or whatever it is at 182. I'm just picking a number, but that goes the other way too. We can gap up. Could be a news event, a tweet from Trump, anything that can happen. It's just always a risk involved. Let's just leave it at that. I think anybody can figure that out if you go home, and that's why I get the questions. You have, as a swing trader, you have 2 extra days of overnight risk. That's what makes day trading and swing trading different. Day traders don't have any overnight risk. They don't have to worry about gaps. They're in and out of a trade the same day. Swing traders, just like investors, there's that overnight risk that anything big can happen, send the stock futures way up or way down, and then you wake up to a big gap for or against your position. So anyways, those are the levels to watch, and I'm just focused. Same story on SPY. I don't need to go over both of those. That's how it looks on QQQ. PPOs, trying to turn up here at the 0 line. If it crosses down, I think I already covered that before. And let me cover a few other things before I wrap this up. Let's just look at these 60-minute charts. I'll tell you, it seems to me there's volatility. One thing, I've seen some comments about the increased volatility, even intraday and in the futures overnight. That's par for the course. As I said, when the VIX expands, volatility expands, you're going to get the big swings. But what I'm seeing lately, today we had the fake out, the false breakout above those bull flags, as I highlighted earlier. Now they've extended. I've extended the trend line. Before they were smaller, and this kind of grew. So we had a fake out, and then, as I expected, an impulsive reversal. Now we hit support. I posted these charts in the trading room. I can't remember if it was on the front page as well. I reversed, covered my shorts, went long there because we hit intersecting supports. We had this uptrend line right here on ES that I just showed you, and we hit that. And at the same time, we hit the support I had on NQ. If I can find that for you here. Where did it go? Yeah, NQ I had support at 76.0475, and then right after I posted that chart, I said I added an uptrend line which came in perfectly as well. So you have uptrend line support as well on NQ, and so it was a logical place to bounce. And so now what we've done is we bounced up. And what I was looking for is a reversal at these downtrend lines. I'm already out and back short again. We're moving up, and it's just been all day today. The 1 minute charts played out beautiful, and now they're starting to get a little bit whippy. So in other words, by beautiful, I mean here was that this coincided with the reversal. We had a breakdown back test, and we had this falling wedge. This right here, this coincided with those 60-minute charts I posted in the trading room under the day trading group when NQ, the Nasdaq 100 futures, and ES both fell to those key support levels on the more important 60-minute chart. Remember, this is a 2-minute chart. But as I like to say, to hone down your entries on a trade, whether I'm trading on, looking at a development on the weekly chart or daily chart, if you come down to the shorter term charts, that helps hone down your entry. If you're trying to look for a long trade and it's based off a bullish chart pattern on a weekly chart, you got to really wait till the week closes to get that solid sell signal. But if I see a very bullish chart pattern on weekly, there's a bullish case to be made on the daily, then I'll come down to the 60-minute chart. I might even go down to a 5-minute chart to get a jump on that trade, and that's what these charts. Now you won't see these. I don't post 1-minute charts on the front page because most people aren't active traders. But this was that setup today at the same time we fell to those 60-minute lines, and these charts were posted in the trading room early in the day trading group as well. We broke out, back tested, and boom, there was the rally, and we hit. I gave you my targets, 186.76, and then on SPY, we'll get to that in a minute. So here's what's going on now. We had these bull flag patterns. We broke out. It started out impulsive like it should, but then that faded. So this is kind of, just say, this is not clean. This isn't what you want to see. When you have a bull flag pattern, the whole part of a bull flag is you have a very impulsive move leading up to the flag formation. Then you consolidate on diminished volume, which you did down here. You can see the volume's low. Then you break out, and ideally, the move should be equally as impulsive, and the measured target, whether you hit the full measured target or not, is the length of the flagpole. So we had the breakout, but then boom, they sold it, and then we floundered around. Now we're moving up impulsive. This is sloppy stuff. So I'm sitting tight right now, with my short positions. But if we continue to build this in the close, for day trade and swing trade positions are two different things. So I want to just be clear that swing trades, they would have to do a lot today to make me close out. In fact, I'm not going to, no matter we'd really have to run for me to close out any swing positions. I told you guys I added on, that bounce up to the 188.37 level, and I'm not concerned. I'll start scaling out in this range. It's Friday as well. You can maybe get some short covering into the close. Let's just see what happens before the close. I just want to say that this is where I'll start to become concerned, and up around this level you can see my next support zone right there. So I'm not going to stop out of any swing positions until at least up here about 190.57 or so. But again, I'll have to just assess the charts as they come. As I'm going to wrap this video up here, see what happens in the last by the time I get this uploaded, there'll probably be a good at least half hour of trading left in the day. And that'll kind of show you the character of this market. Do they, sell off into the close? That would certainly help. And again, it's all about, forget about this 1-2 minute chart I'm looking at. It's mostly about this right here. Because, what that does, it puts a knife through the heart of longs that ended up, buying into this yesterday thinking, wow, big 2.5, whatever it was, percent move. That means the correction's over, everything held support, we're going a lot higher. If that gets faded, again, a lot of people bought into that. A lot of shorts were squeezed out. We drop down, it sets the stage, as I talked about before, for a much deeper drop. And on a final note, I'll leave it at this. If all those things develop, fade this candle, take out top of Monday's gap, and then especially take out these lows, the 200-day, my expectation is that at that point, when you get down here, below there, possibly even earlier, you'll start to see the selling accelerate. And so therefore, it's hard. Sometimes I try to get my updates out as quick as possible, but at that point, if you wait too long and you wanted to short, you're probably not going to get it. you're not going to get a very objective entry, I should say, because that's the one certainty, or near certainty, is that stocks tend to fall a lot faster than they rise during these correction periods, and so if you snooze, you lose. All right, and finally, all that talking about what can and might happen on the way down, and just remember, I don't have to spend too much talking about the way up, because if we start to go up much more above there, and showed you those downtrend lines on the 60-minute charts, it just means my analysis is plain wrong, and I think if we pop that downtrend line, take it out with conviction, we'll probably go to new highs. So to me, that's very simple. It doesn't entail a lot of talking and discussions. Just my plan is to stagger some stops and start layering out somewhere in this area here, if and when we get there. So like any trade, it either pans out or not. Depending on what we see, I said I'd wrap it up, but I covered in today's earlier video, I covered the semiconductor ETF, SOXS, and I gave you some rough targets, but I'm very close to adding this one as an official trade, and I wanted to show you I've already worked up some targets. Depending, these may change, or at least the stop may, depending on the entry. Like I said, there's work to be done to firm up the bearish case. We need to reverse those candles. So late in the day, I'll probably not add this on before the close today. But for those in it, you want to see some targets, and stops are we set, commensurate with the final target. If you're only targeting a lower target, that's about a 14% pop to that first target. You use a tighter stop, maybe about a 5% stop. If you're targeting, that target up there, it's set below the actual resistance level, so that's 67.10 is about where right now where that target would be. About 41%. You can allow yourself 12+% stop loss, and you're still looking at a 3-to-1 risk-reward ratio. So that's one potential trade idea. I'll keep it unofficial for now, but who knows? If I see something I like, maybe I'll fire it off before the close. But like I always say, official, unofficial. The problem is right now we have these kind of soft entries, a little more work to be done. You could certainly, if you're an aggressive trader, certainly start taking some positions now. I think it's worth it. As you guys know, that's what I've done, but I know a lot of people aren't. A lot of people have been burned in this market, especially on the short side this year. It's been unusually tough, an unusually resilient trend, but from those stubbornly bullish trends and the excessive bullish sentiment and extreme lows on the VIX and short interest and all that other good stuff, that's where the big drops come from. So the upside potential on a short on the semis, profit potential is big, and it's much larger than the stock market if the stock market does take that dive down. So this is definitely one I have now, and I'll be looking to add this on as official trade if we get that good entry, objective entry. Just hope we don't get a, one hand, I do hope we get a big gap on Monday, big gap down, that is. That means SOX this one, SOXX, will gap up. But as far as the trade ideas and you guys on the site, I'd like to see a nice objective entry. It'd be great to see the markets kind of break down and the semis lag behind and not get the Q right away. We'll see. All right, let's wrap it up here. Let me get this out to you guys.